A series that I want to do a whole lot more of in 2024 is the subscriber portfolio reviews. Essentially what I do in these videos is go over my subscribers' portfolios, their goals of the portfolio, and give any feedback and criticism that I can. And today I have a good one, and it's actually the first sequel that I've ever done on these portfolio reviews, so it's always fun to see how investors have grown and changed over time. Today we'll be going over the Dividend Investor's portfolio once again with some big updates to it. The Dividend Investor also has a great channel, and I think if you appreciate longer content and you appreciate simplifying things, he does an amazing job at that. I'll tag his channel in the description box below. Another point of this series is to show how my followers are actually real man's investors and have the balls and courage to show their portfolio to the entire world, unlike some finance channels like Jeremy. And since they're real man's investors, they'll of course need a real man's investing t-shirt. The link's in the description. Also check out the Do Dividend Stocks Not Drugs merchandise while you're at it. Thank you, and of course, roll the intro.
Hello, I like money.
And hey you, right there, do you want me to go over one of your portfolios? Join the Discord link in the description and message me from there. On to the video. So typically how I love to start off these portfolio reviews is I love to know the investor's objectives, goals, whatever at the portfolio, because what may be my goals may be different from yours. So I kind of like to understand your objectives, your mindset, your investing strategy, etc. Me and the Dividend Investor have a very similar investing strategy of just finding really quality businesses to invest in at a fair price. I think that's honestly the best way to go about it if you're going to be choosing individual stocks. When you find these kind of quality businesses to invest in, dividend growth, share buybacks, capital appreciation, all that stuff will follow along. But the main principle is just finding really quality businesses. To start off, his first objective here you can see on the left side is to reach a portfolio value of $1.5 million in 15 years. In the video, you'll see his portfolio value is currently sitting around $42,000. So I think absolutely if he continues contributing money with capital appreciation, and assuming we don't get into a 10-year recession or whatever, I think he'll be absolutely bound to hit this. As I mentioned, price appreciation and dividend growth are two of the main objectives in his portfolio, and as I kind of said earlier, that just comes naturally within finding the great businesses that we invest in. And with his businesses, he wants to invest in predictable cash-generating equities, aka amazing businesses. So I love this strategy. It's the best way to go about it if you're going to be picking individual stocks. To start off, let's go over the sector allocation. Currently, 18.2% of his portfolio is in tech. Now, I don't love to see a sector this high, but I think tech and some of the businesses that he owns are so high quality, so I'm not upset about this whatsoever. For me personally, 15 to 20% is where I personally like to cap out at when it comes to a sector. I am a little heavy right now in retail and tech, so I'm definitely not going to nag on him for that whatsoever. If that's a red flag, then it's a really good red flag to have, and I'd assume that the companies making up this tech holding, if I remember correctly, are very high quality businesses, so I'm not going to give him any slack for this whatsoever. Next is 5.9% of his portfolio in Canadian banks and 7.5% of his portfolio in US banks. He's a really good guy to go to when it comes to Canadian banks if you guys ever struggle with that kind of stuff like I do. But me personally, Canadian banks are something that I want to learn more about in 2024. Obviously, if you guys are subscribers of the channel, you would know that I'm not really looking at anything new unless it's a crazy good opportunity. So he talks a whole lot about Canadian banks on his channel, and it's something that I do want to definitely research and dip my toes into when it comes to the knowledge side of things this year. Next, he has 10.1% of his portfolio on railroads. I think railroads are an amazing industry to be in, very monopolistic features in there, quite literally impossible to compete with. If you want to give me $1 million right now, tell me to start a railroad, I simply couldn't. Give me $1 billion, tell me to start a railroad, it would be really hard to. Railroads are very limited when it comes to their building space right now, and I didn't really realize until last year how much our country really relies on railroads. They're basically legal monopolies at the end of the day, with some regulation in there, of course, as with all our legal monopolies that we invest in, wink wink. I am bullish overall though on railroads for sure, and I think they aren't going anywhere long term, and I think there is solid growth still to be had. Next, he has 10.6% of his portfolio in the payment processing sector. I think this is absolutely an amazing sector to be in, and when we're talking about monopolistic features in businesses and sectors, it doesn't get more monopolistic than payment processing. I'm so bullish on payment processing. I definitely want to have my payment processors make up 10 to 20% of my portfolio by the end of 2024. They're such amazing businesses, and basically they have so much pricing power, so hard to compete with, such high barrier to entry, and I can't say enough good things about payment processing. He has another 10.6% of his portfolio in consumer discretionary. Now, I'm going to be a little upset if this isn't Starbucks, but of course I think it is solid to have some good discretionary in there. I think those are definitely the more profitable businesses businesses at the end of the day, more fun companies to invest in, but definitely some really quality holdings you could find in the discretionary sector. Then he has 12.3% of his portfolio in real estate. I love real estate. That ain't going anywhere. Great hedge against inflation, and I think long term it's not going anywhere. And lastly, he has a cash position in his portfolio of 11.3%, which I absolutely love. I'm actually building up my cash position right now. I'm at about 5%. I'm going to be depositing a lot more money in my portfolio real quick, and I'm aiming to have an 8 to 10% cash position built up in my portfolio consistently. It'll be hard to do, especially if you know me. I love to buy stocks, but it's something that I've really built up, and if you're a viewer of the channel, you know that. Alright, let's get into the meat potatoes here. Let's move on to the holdings. To start off, right now, his market value of all of his stocks combined is $42,072.41. Very solid, and I think as I mentioned, if he continues contributing gains, share buybacks, dividends, all that stuff, I think he'll definitely be able to achieve that 1.5 million easy. To start off, his largest position is something that I love, which is also my largest position, which is Microsoft, stock ticker MSFT. Now, I'm sure he didn't buy Microsoft for their crazy AI, but I'm sure he bought it for their subscriptions-based cloud business. Microsoft's an absolute behemoth of a company. Me personally, I'm really bullish on Microsoft because of their gaming along with their cloud business. I think they have a lot of potential with that. But Microsoft's his largest position, and he's 43% in the gains right now. Now, Microsoft is not the craziest dividend company, but over time, that total return will be insane for them. His second largest holding is one that he talks a whole lot about on his channel, which is Brookfield Corp, stock ticker BN, and currently he's up nearly 29% on the position. Now, me personally, I don't know a whole lot about this holding, I'll be completely honest, and I don't like to lie and say I know a lot of stuff on these portfolio reviews. When I see a stock that I don't know much about, I'll just say it blatantly. But recently they've had a crazy hike up in stock price. Now, looking at their financials, share buybacks, free cash flow, and all that good stuff, it's not the best company whatsoever. But I'm not going to sit here and make some blatant statement about it, some ignorant statement, because I simply do not know anything about their business whatsoever, besides that they're an asset manager. He has his own thesis on it, and I recommend you guys go check out his channel to learn more about it. So, for Brookfield Corp, I have no comment on it at this time. As I predicted, his next company is Apple, stock ticker AAPL, which is his third largest holding. Apple is such an awesome company, but it was trading down today after some company downgraded them. Makes a lot of sense. Rational stock market moment. But in all seriousness, Apple's an amazing company with a great moat at the end of the day. They have an insane share buyback program, and I'd love to buy some Apple in the 160 to 170 range for sure. He's up currently 31.88% on his Apple. Next, he has Amex, which is a payment processor, which I definitely approve of this position, and currently he's up 25.51% on Amex. Amex is a strong company, but I do prefer Visa and MasterCard over it. Next, he has CP Rail, which is Canadian Pacific. Now, I think this is a pretty strong company. I own Union Pacific right now. I bought in before they actually appointed Jim Vena as CEO, and I think that there's a lot more growth to be had with Union Pacific, and that's why I own it over CP. Also, Union Pacific's dividend and growth financials are a little better than CP's at the moment. Next, he has JP Morgan in the portfolio. Now, I think Jamie Dimon is an amazing CEO, and if I were to own a bank, it would be JP Morgan. But right now, I like to stay out of banks. Next, he owns Brookfield Asset Management, which is pretty much the same thing as Brookfield Corp, so I'm not going to go over that again, but he is up decently on the position at 21.88%. I'm sure there is an actual difference, but I'm not going to speak on it as I'm not an expert. Next, he has Costco, and he talks about Costco a whole lot on his channel as well. Costco is such an amazing business, and he's up on Costco a whole whopping 54%. Now, I'm up on my Costco position as well, as it's absolutely been on a tear during the end of 2023. Hopefully in 2024, it can get on a bit of a dip, and then get back to a reasonable price. Costco's never going to trade at an actual undervalued price. In people's opinions, it's always going to have that premium on it. You just got to find good times to buy it, and I think if you're going to be buying Costco for a really, really long time, it's always a good buy. Go check out my Costco stock analysis if you haven't already and want to learn more about it. Speaking of companies I love, the next company is Visa, stock ticker V, which he's up 32.12% on. Every day that passes by in my life, every day I wish I bought more Visa. Visa is such an awesome company. It's a core holding in my portfolio right now. It's been trading up from 230 to 260 as of late, but if it goes back to the 240s, I would love to add more. I think it's at a fair price though long term, and I definitely, if it continues to stay at these prices, will continue dollar cost averaging. Visa doesn't have the biggest dividend yield, but they're such an awesome company with their payment processing network, basically a duopoly with MasterCard. Now, the difference between Visa and MasterCard is that MasterCard has a higher return on capital employed, while Visa has the larger current market share. Now, I like the larger current market share over the return on capital employed, but I think both are amazing businesses regardless. I love Visa so much. I'd like to see him make this a top 5 position for sure in the portfolio and continue to build it up. I really do think that Visa is near fair price right now if you're buying it for a very long time, but if you're like me, I'm a little picky and I already got in a little earlier. So I think if you're a newer investor, Visa is an amazing buy right now, and I think it's a fair price. Speaking of more companies that I've been buying to a lot in the last couple of months, next is Vici Properties, stock ticker VICI. Now, Vici was trading near $26 a share this fall, and I actually picked some up near $27, and my position has been built up a whole lot since then. I'm expecting to get a meaty dividend from Vici this come January, and I'm really hyped up about it. But Vici's been trading back in the 30s again, and I'm happy where it's been at, and definitely I will continue adding at the right price. Next is Agri Realty. Now, I don't know anything about Agri Realty, so I'm not going to speak on it, but it is a pretty sizable position in his portfolio right now, and he's up a little bit on it. Next, he is Lowe's, and I think Lowe's is a pretty strong company, and them and Home Depot have a really strong duopoly right now amongst the home improvement retail business. Now, unfortunately, Ryan owns a whole lot of retail in his portfolio, and I'm being a little picky of adding new retail, but I do like Home Depot around $300, and I've targeted that as a stock that I want to add to at that price. So right now, Lowe's and Home Depot, I like Home Depot mainly for the consistency factor. They've been producing free cash flow a lot more consistent than Lowe's, but I think both are really strong companies. Next, speaking of companies that like to produce consistent free cash flow, we have Realty, not Reality Income. Realty Income, everybody wanted to sell out of it not that long ago, including myself. Now, I want to sell out of it for a more logical reason that I stand by, but I think they have limited growth ahead of them compared to a company like Vici. With that said, though, I do have a cost per share around $60, and I'm still in the red, and I think that long term it's still going to be a fine company. I just think that total return wise there's going to be better options, and for my time frame, I just don't love Realty Income. But right now, I will happily sit back, be patient, and be paid for being patient with Realty Income's monthly dividend. Next, he owns TD Bank, which is a Canadian bank, Toronto Dominion. I think this is a pretty strong holding looking at their financials, and once again, if you want to learn anything about Canadian banks, watch his channel. He also owns National Bank and Bank of America, so he's getting plenty of bank exposure, and he's clearly experienced and knows what he's talking about because he is a CPA. I do have a little bit of a challenge for him though in the comment section. Convince me to buy a bank. Convince me to buy one of these bank stocks, JP Morgan more specifically. Why should I buy banks? I'm always open to hear, and I'm definitely curious to learn about it, but try to convince me. I would just love to hear his thesis on banking companies, because you don't hear about that a whole lot, especially in the Discord link in the description, because he has a pretty heavy allocation in banks right now, and I'm just curious to hear. Next, he owns Union Pacific, stock ticker UNP, which is another railway company, absolute strong company. I love them so much. I hold it in my portfolio. I think they have a lot more growth ahead of them with their new CEO, Jim Vena. I've been very happy with my UNP position. I'm actually up on it right now too, and I've been actually buying some more recently with my portfolio rebalancing and reconstruction. I definitely want to make it a solid 5 to 10% holding in my portfolio. So, I love Union Pacific. Speaking of railways, next he has Canadian National Railway. This is another company that I haven't done a whole lot of research on, but I can just only assume by the name of it, it's a strong company. I love railways, and I think their business in the industry that they're in is very monopolistic, very shareholder friendly. Now, politically, you may agree with some of their practices, but I like to keep politics out of my investing style. We want to be mean, greedy Ebenezer Scrooges here. Next, he owns American Tower Corp, a very interesting REIT. I'm personally not a huge fan of this holding just due to its underperformance, and I think there's a lot of better growth options out there, but I do see a lot of people that are convicted with it. His next holding is Google, stock ticker GOOG, and I'd love to see this be a bigger holding in his portfolio. I think Google's actually candidate to be added in my portfolio at some point at the right price, but obviously another tech holding there. Would he want to add more tech exposure to his portfolio with already that 20%? I don't know, but I think Google's a great company as well. And his tiniest holding is MasterCard, stock ticker MA. Now, I think he has plenty of room to build up this MasterCard position. I think MasterCard and Visa definitely should make a solid part of the portfolio, and I definitely would not be against adding more to that MasterCard and Visa and making them maybe both core holdings, or at least continuing to build up that payment processing industry part of your portfolio. I think that can afford to go up to 20% if I'm being honest. And also here his diversification right now in his portfolio, and it's all green flags for me, very quality diversification. His biggest source of dividend income is Vici at 10.6%, and currently his biggest holding, I said, was Microsoft. Alright, time for me to give my honest feedback. So I think you have definitely some room to trim your portfolio. I think 25 holdings is a bit, but once again, I'm near there as well. So I'm definitely think there could be worse. One thing I notice is that you do own a lot of the same companies in a specific sector, and I'm sure you have your own thesis for that. And I do think that it is a little crowded in some specific sectors. I'm also sure that there are some short to medium term holdings that he eventually plans to, trim or sell out of, which I'd be very curious to hear in the comments section. But I definitely do think there are 5 to 10 positions you could sell out of. Some examples, in my opinion: American Tower Corp, Realty Income, I think eventually. There are a lot of banks in there. I understand the Canadian banking system's made up of like 5 or 6 banks, so I'm kind of curious to hear, if there's a conviction to kind of own them all. If there's any differences, I'd love to hear. If there isn't any crazy differences that isn't part of your strategy, I would focus on maybe the best 2 out of those banks and just allocate all your capital there, or your highest conviction. And that kind of goes for the rest of the portfolio in some of the sectors as well. Alright, that's the end of the video. I think this portfolio is very quality, but as I mentioned, I think there is a little bit of stuff to trim up, but I think overall it's a very quality portfolio. I really do appreciate him for sending it in. Not a lot of people have the guts to, submit your portfolio and have the entire world have access to it, but this guy does, and I can definitely respect him for that. So go check out his channel if you haven't already. Thank you all for watching. Make sure to check out the Do Dividend Stocks Not Drugs merchandise if you haven't already. Thank you, and of course, Do Dividend Stocks Not Drugs. Have a good one.